Ladies and gentlemen, this is Greg Michalowski for ForexLive.com. This is a weekend Forex look at the euro versus US dollar as we look to head into the new trading week. What are the key levels that we're going to be paying attention in the start of next week's trading? So sit tight. Let's start by taking a look at the daily chart. And when I look at this chart, what do I see? I see the market opened up this week below this swing area. The swing area defined by a number of different swing lows through here that became a swing ceiling area through here, and we rotated all the way to the downside here to our low price for the year before rotating back to the upside. Actually, it was in 2022, rotating back to the upside through here and trying to extend to the higher there, and then move back below it to a modest decline down in toward the 100-day moving average, where the price finally moved up to our high price for this year, reaching a double top here at the end of April and early May before rotating to the downside in May. Nice little trend type of move to the downside in May. That closed the month at the low or near the low. We made the low on the last trading day, and in trading in the first few days of the new month, we have moved higher, moved back into this swing area. Took a long time to say it, but this swing area comes between 1.07509, 1.0805, and you see this blue line right here that represents the 100-day moving average, and that is starting to turn over, currently trading at, or currently at 108.13. So I can imagine that this price would start to move back down toward the high of this swing area at 108.05 in some time early next week. So guess what? That level is going to be a key resistance off the daily chart. As long as the price remain below it, the bias would probably be more to the downside off of this daily chart. Remember, this pair came all the way from here before rotating back to the upside. So you can argue for we're in a bull trend, or we're in a bear trend, 6 of one, half a dozen the other. So let's just pay attention to our moving average, pay attention to our swing area through here, and use that to our advantage. The current price is trading at 107.12, so we're about 100 pips away from the 100-day moving average as we enter into toward the new trading week. And we are actually below the low end of this swing area. So we'll be watching the 107.509 level first as resistance, as an interim resistance. If we get above that level, then we look toward the 108 level in early trading next week. Now let's take a look at the hourly chart and see how that all dovetails in with the price action off of the hourly chart. And when we look at this price action here, we in trading this week, we opened up below the 100-hour moving average. Let's count what days: 1, 2, 3, 4, 5. So this is Monday. The price all of last week traded for the most part below the 100-hour moving average, just several times above that level, but did not sustain momentum. On Tuesday, the price moved above the 100-hour moving average, trading above and below it, and then rotated to the downside, making our new low before rotating back to the upside on Thursday's trade and getting above both the 100 and 200-hour moving average in the process. However, if we take a look at the move down from this high going back to April 26th, the high price in this week's trade didn't get anywhere near the 38.2% retracement. That would have been the minimum target that we need to get to and through if the market buyers are going to take control. And note that the 100-day moving average is also near that level. So not only do we have the 100-day moving average, we have the 38.2% retracement, and we know from the daily chart we have the top of this swing area as well, also in that area. So can you see how that level is going to be even more important next year from all these confluences of technical levels that occur right at this area up here? So as long as the price can remain below that level, we know that the sellers remain in control. Now, in the shorter term, we've seen the price move back below the 200 and the 100-hour moving average. That's the green line right here and the blue line right here. And we are trading just below those levels at 107.11 level. The 100 is at 107.15. 200 is at 107.28. So in the short term, we're going to say as long as the price can remain below these moving averages, the bias remains to the downside in the short term, and we can continue to see the price move away from the 100-day moving average, move away from that 108.05 level, move away from that 107.50 level on the daily chart, 107.51 level on the daily chart. So as long as that can happen, then we're okay. We're okay. and the sellers are probably more in control in the short term. On the downside, if we break below this swing area right through here, the swing area has a number of different swing lows, including right here and here, and I'm going to put it on the arrow right here. Here, broke below it here, failed, and then reestablished. Sellers, moved back above it here, and the low price today came into that swing area just to the high of it. Break below the 106.90 level, and it looks like it opens a door for further downside in the euro versus US dollar. So there you have it, a pretty detailed look at the euro versus US dollar as we head into the new trading week. My name is Greg Michalowski. Good. If you like this video, give it a thumbs up. Good fortune with your trading. Bye-bye now.